Welcome to our 314th weekly webcast. If this is the first time you're joining us, welcome. If you've been with us before, welcome back. So the way this call works is this is an AMA, like you see on Reddit, meaning ask me anything. You can ask me business questions, personal growth questions, investing questions, startup questions, etc. And my humble goal is to help you take your career, your portfolio, your happiness, etc. to the next level. So without further ado, let's begin. And thank you as always. First question is from Devon. Hey, Devon. And I saw last night, tons of people posted questions. Please only post about 2 hours before we go live because YouTube delete those, so sorry. Devon wrote, hey, Chris, how are you and the family? I'm always great, thank you. What will happen to the United States bonds if they lose the status of global currency? Yeah, so what's happening right now, a couple of weeks ago, 2 Wednesdays ago, the Trump administration, under the advice, I think, of Bessent, put the tariff war on hold for 90 days for every country except for China. The reason they did it, and they won't tell you this, but I think this is the reason they did it. The reason they did it was because Japan and China were selling treasuries. Let me explain what this means and what the dramatic impact is on the U.S. economy. So what happened was, the United States has $36 trillion in debt. Okay, so Japan owns $1 trillion of that. So 1 over 36 trillion is 2.7%. China owns less than $750 billion, which is around 2% or so. And so what they started doing, the Chinese government and the Japanese Minister of Finance, they started selling U.S. treasuries in size. Okay. And what that means is it causes, like a stock, when you sell treasuries or anything, it goes down in value. But it also drives up interest rates. How is that possible? Well, here's how it works very quickly. So let's pretend this is a $1,000 US Treasury right here, okay? And let's say, for fun, that you get $50 as a coupon every year. So $50 over 1,000 is 5%. Now, the $50 doesn't change. So as the price of the treasuries goes down, the $50 stays as is. So if a treasury goes from $1,000, hypothetically speaking, to $900, at $900, that yield, 50 over 900, is about 5.7 or 5.8%. So it drives up interest rates, which is very, very dangerous. And I think that Mark Carney, the Canadian acting prime minister, is probably involved in that as well, because he was the former Bank of Canada official, and he was also the former head of the Bank of England. So I think he had part to play with that as well. This is a trade war, right? So I think this is going to pass. I think a year from now, things will look very different. Things are never as bad as we think, okay? Now, whenever you invest in treasuries or any currency or any market, everything is relative. And the very last company on this planet that will ever go bankrupt is the U.S. government. It is what it is. So I'm not worried at all that the United States in the near term will lose the status of the world's global currency, okay? It's the most capitalist country there is. It's not a command economy, so I'm not worried at all. Things are never as bad as you think. Okay, next up, the question is, for Europeans investing in the S&P 500, they can lose value when the dollar loses its value. What can the alternatives be for Europeans? You can certainly hedge your exposure to US dollars if you want to. Now, if you guys want to invest in ETFs, meaning exchange traded funds, the best website I can direct you towards, which is free to use, is etfdb.com. etfdatabase.com, etfdb.com. So if you go here, you can look at tons and tons of different ETFs. Let me try that again. I typed that wrong. That's ETFBC. Okay. Database. Give me 1 second. Okay, good. It's fun doing these things live. And what you can do is you can always go to ETFs by geography, and you can find exposure to European ETFs if you want to. So if you want to invest in Germany in the DAX or the CAC 40 in France, you can click here to invest in those if you want to. You can also invest here if you're bullish on natural resources in the Brazilian ETF EWZ or EWZ as we see in America, which will give you exposure to the Brazilian economy. So always use this resource here. Now, you can also look at getting access to different themes like leverage ETFs. Be careful with that. Gold, healthcare, biotech, travel, lithium, etc. So use that website, please, etfdb.com. All right. Next question I've got is from Tabo, who wrote, hi, Mr. Haroun. Chris, please. Hope you're well. Likewise. You shared your experience during 9/11 incident. Yeah. I saw it all. Yeah. Can you tell us more about your great financial crisis experience and how did you feel at the time? Did you see the crash coming? Yeah, so I was back in 2008 when we were within 24 hours of bank machines not working. I saw it. I was net short. I started my hedge fund earlier that year. Thank God I was very bearish, so I was net short. My biggest long position at that point in time was gold, GLD. Gold is always a flight to quality. Everybody should have gold in their portfolio after you do your research. It's no surprise to me right now that gold is at an all-time high. What is surprising to me is that Bitcoin is not higher. I think that what's going to happen longer term is as the Chinese government decides to buy less U.S. treasuries, meaning yes, U.S. dollar exposure, they're going to buy more gold in the long run and also digital gold, which in my humble opinion is Bitcoin. Most cryptocurrencies are an absolute scam. I do believe that at some point in my life, Bitcoin will be $1 million per coin. I don't know when. I don't know the path. I know the destination. I'm very long-term focused. Do your research first, please. Okay. Yeah, everybody saw the crash coming. Everybody knew it was happening. It was just in terms of when would it occur. And it was a very difficult time because I remember in September of 2008, what happened was Lehman Brothers went belly up and the U.S. government took all of the shorts that Lehman Brothers had through their prime brokerage division and covered them all on a Friday. And that made stocks go up massively because of that. So there was a lot of government manipulation, that's right, in terms of the market, et cetera. And things got crazy too. I remember that at that point in time, apparently, according to people familiar with the matter, some hedge funds may or may not, and I didn't do this, have hired actors to line up outside of mid-cap banks in New York City. And of course, they were short, right? So there's a lot of unethical stuff occurring at that point in time. So my biggest holdings were very, very safe stuff, right? And the US dollar rose a lot then as well, even though the crisis came from the United States, because the United States is and usually will be in the long run a flight to quality. Yeah. And then you wrote, what was your employment position at that time? Did you lose your job? I say this with all respect. No, I started my own hedge fund early in 2008. And so I raised a lot of capital and I was net short. And I remember in October of 2008, October 2008, the markets were down 20, 30, 35% or so. We were up 3 or 4% of our fund that month. And it was depressing for me. And the reason it was depressing is because I come into work every day hoping for bad news. I would hope that banks would go under. And it felt awful. It felt wrong. And that's why I transitioned eventually my hedge fund into a hybrid fund where we invested in private companies. I invested in Facebook, for example, pre-IPO. And this kind of turned me into a longer-term investor. And then I met Tony Robbins when I was pitching one of my portfolio companies, venture capital, to him, and he convinced me to teach. And I can talk about my origin story in more details if you want me to. Okay, you wrote on episode 296 of your weekly live, you mentioned you had depression. Yeah. And I'm very transparent with everything. Transparency hopefully builds trust. Yeah. Did you know what caused it? Do you have a routine? And do you remember how you felt at the time? I wasn't happy. Yeah, sorry. I don't know what caused it. There's nature and nurture. It's just the way I am. But I'll show you how I deal with depression. And for those of you that are dealing with depression, I'm going to give you some tips as well. I'm not a doctor. Talk to a doctor first. Okay. So step one, motion creates emotion. So the way that I deal with depression, and I'm not depressed anymore. I'll show you how I deal with it. So what I have in my office here is I have a treadmill, okay? And every day I got about 20 or 30,000 steps in my office, okay? And I go through a new treadmill every year or two because I use these things like crazy. They're like $150 on Amazon. So what I do is I walk all day long. My desk goes up and down as well so I can still type as well. I wear my Apple Watch in my pocket so I can count my steps. Now, when you do this, you feel like $1 million. It's kind of like when you go to the gym after you work out, you don't tell yourself, God, I wish I didn't work out today, said nobody ever. And so it's not just about aerobic stuff for your heart, etc. More importantly, it's about weights. Okay, so when you do weights, and we do have time to do weights every single day, you feel like $1 million. So for me, I beat my depression by actually by exercising. I also do it by drinking a lot of water and the right nutrition as well. I biohack a lot. I take a lot of vitamins as well, and herbs and all that stuff, right? So I try to do it the natural way. I have bulletproof coffee every morning. I can talk about that from a biohacking perspective. Okay, it allows you to think more clearly, kind of like Bradley Cooper in the movie Limitless, right? So exercise is a free drug. Exercise is the answer. What I also do is I'm part of that whole quantified self movement to the extent that I monitor everything. Okay, and I'm a nerd, clearly. But I wear this Oura ring, okay? O-U-R-A ring. And the great thing about this, and I humbly recommend everybody consider getting, if you have the budget for it, you might even be able to get to write it off for insurance purposes. The great thing about this is I monitor my sleep, okay? Now, you have to get 7 to 8 hours of sleep every night, no matter what. Otherwise, you won't make it. Now, the most important thing about sleep, and this helps with my depression and my cognitive abilities too, is getting what's called deep sleep. And this ring will measure that as well. Now, the best way to get deep sleep is to, if you use one of these devices at night, this or a Switch 2 or whatever it is, you got to make sure that you're wearing blue blocking glasses. Okay, and I'm going to show you where to buy these in a second. They're dirt cheap. Now, I went to Stanford University for a sleep study, and this was one of the recommendations. So what happens is when you use these devices at night, blue light comes out of them, which messes up your cognitive abilities and makes you not have enough deep sleep. You get more REM sleep and not deep sleep. Deep sleep is crucial because what it does, it helps to repair your brain and your muscles and everything. Okay? And the way to, I'm going to show you where to get this deep sleep blue blocking glasses thing. So I'm going to go to my orders. Okay. I was just video editing this morning, lots of stuff going on. But let me go here to glasses, okay? So you can buy these glasses. I'll show you here. They're generic, right? You can pay like 12 or 13 bucks, whatever, for a pack of 2. And what these things do, and this is scientifically proven to be effective. I promise you this works. It blocks out the blue light. Now, if you wear prescription glasses, you can ask your doctor or wherever you get your glasses to put the blue blocking filter on as well. This helps you out tremendously. Another thing I do to combat my depression, we're all different, is I'm deeply religious. Okay, so I always tell myself that God already knows what's going to happen, and that puts me at ease. Okay, so I even believe that if we worry too much about our career and stuff we can't control, that we're being disrespectful to our faith, and we certainly don't want to do that. What I also do to put me in a peak mental state and beat depression is every day I practice gratitude when I get up. So I always thank God for 10 things in this order. Andrew, Matthew, Dylan, my wife, Christine, my mom, my dad, my brother, Jamie, my little sister, Elizabeth, the memories of my beautiful sister, Katie, who's hanging out with my grandpa right now. I miss you so much. And then lastly, my students. I'm grateful. Then I read a chapter of the Bible. I can tell you which Bible if you care as well. Practice gratitude. Yeah. Another thing I do, which I think helps with depression a lot, and please do this, everybody, is take one day off a week. Okay? Now, here I go. I don't care. God created the world in 6 days, and he rested on the 7th. He didn't have to. But he was kind of telling us, you got to take one day off or you'll burn out. And so for me, I'm Christian, I'm Catholic, I go to church on Sunday. A lot of my clients will take Saturday off for religious reasons or Friday off. Take one day off a week. I promise you it's a great investment in you. Otherwise, you will burn out. So those are some biohacks. If anybody else has biohacks or ideas on how to beat depression, please enter them in the chat. If you have serious depression, please talk to your doctor about it. There are solutions they can help you with. Thank you. Okay, next question is, furthermore, do you think depression changed how you behave and your perspective on life and people? How did your perspective on life change from then and now? Yeah, so my depression, and I think we all have it to a certain extent. If I don't exercise, I feel depressed, right? It's amazing how this thing is self-correcting. Yeah. So I'm just not happy. Yeah. Thank you for the question. All right. You wrote, lastly, how does your family perceive your situation and how they contribute to your recovery? Would you say you fully recover from depression? And then you wrote, that will be all. Sure. I love your questions. Thank you. I hid it from them. They never knew. I never talked about it. I just exercised. Yeah. Okay. And another way to beat depression, I think, is to stay busy. Now, if you want to get something done, give it to a busy person. So in my MBA programs, my coaching services, you can learn more at the link in the description. Set up a call with us. There's a daily planner that I have my clients, my customers, my students fill out. If you want to get something done, give it to a busy person. Okay, and I have you set deadline dates as well. It's kind of like when you go on vacation or you take time off, for some reason you don't even have time to go to the gym. Stay busy. Yeah. Okay, next up, Peter. Hey, Peter. Peter wrote, hi, Chris. How Have you seen any coverage of the Australian election where you are? Do you have any observations? I don't. I'm in the United States. Don't really keep up to date on that. But what's happening globally is there's been a shift to more, you guys see it as well, more right-wing governments. Yeah, it's just happening. It is what it is. Yeah. Okay. And then Ray wrote, "Hey, Chris, I'm loaded with questions right now. Go for it. If Elon Musk steps down from DOGE, will that be good for Tesla?" Absolutely. So when I used to work in the hedge fund industry, I would look to short companies, partially based on the fact if the CEO founder became disengaged with the company or had a new pet project, like they bought a sports team. And we saw this, history repeats itself with Elon Musk. When he bought Twitter a couple of years ago, his execution focus on Tesla went down the tubes, and so did the stock. And so it was kind of a layup of a short for hedge funds over the past 6 months or so. He took his eye off the ball. He wasn't as focused on execution with Twitter or with Tesla, and he was focused on Doge, right? So I think Tesla could be a great long-term investment if and when he returns, and I think he will return. Do your research first. Now, when you do investment research on companies, you have to look at fundamentals, valuation, and a distant third is technical analysis. Certainly, the stock has been oversold. I can walk you through my templates and how to do that if you want me to. Thank you. All right. Next question is, how do you understand if there are options in an ETF? Yeah. You can always go to holdings. Okay, so what you do is when you look at options, and let's go to Yahoo Finance here, and I always recommend free sources. And for those of you that want to subscribe to Bloomberg, don't waste your money, you can do almost all of it here directly on Yahoo Finance. So you can just type up the ticker of any ETF if you want to, okay? And you can do a search for options related ETFs, and then you're going to click on holdings right here to see what the breadth and depth of the ETF is. You can also read the investment offering memorandum, which is available on the website of the company like Vanguard that offers the ETF. Yeah. Next question is, how far in the past do you read 8Ks and quarterly reports? How old S1 reports should we read? Yeah, so the most important document you can read when you start doing investment research on a company is what's called the S1. And this is the investment offering memorandum when a company goes public or files go public. And the way you know a company is going public is if on sec.gov you see the S1. So this here is the S1 from Facebook, or Meta, I guess it's called now, when they went public back in mid-2012. You can usually get these things online if the company went public within the past 20 years. It's harder to get the S1 filing on Microsoft or Apple or Oracle, for example, as they went public back in the 1980s. Start with this thing. Then after you read that thing cover to cover, and it lists all the risks as well, and it's written by investment bankers and lawyers. After that, you're going to read the annual report. And when you read the annual report, of course, you can look at the three major financial statements. I can go into more detail if you want me to. But most importantly, you want to look at the financial notes. Okay, and you can certainly use AI to analyze this stuff as well. Now, I've got a product coming out very soon that I'm working very hard on with one of my students. Let me show you here, where we use AI to analyze financial statements from scratch, including footnotes. Okay, so it's going to be a great course coming out very, very soon. But whenever I analyze a company, I also build out my own financial model. For those of you in my MBA program or my other programs, you can learn more at the link below. I provide you with this, and I teach you how to forecast financial statements, value companies as well. And I teach everything from scratch as well, based on my real life experience. It's certainly not based on theory. Yeah, go back as far as you can. Now, for those of you not familiar with how to actually get these documents online for free, there's two ways to do it. Okay, when you're doing investment research, let me show you really quickly here. So the first thing you do is you enter in the company name, so apple.com. And then you go investor relations. And this is going to use Google to search Apple. Okay. And then here you can read everything you want on the company right here. And you can get all their financial reports here. Or you can go directly to sec.gov. Okay. And you type up the ticker here, Apple. Okay. And then what you're going to do is you're going to read through the annual report, comes out once a year, and the quarterly report comes out 3 times per year. And all of the 8Ks, meaning the current reports. And you're going to build out your financial model as far back as you can go. And when you build out your financial model, what I want you to do, and this is what the experts do on Wall Street, is I want you to listen to every earnings call. And if the CFO, for example, says, gross margins were artificially high in this quarter, and the reason why, you want to go here and insert a note as to why. And if you insert tons and tons of notes like that, then it's very, very easy to forecast financial statements and come up with a target price. It's a lot easier to forecast than you think. A lot of people get scared by this stuff, but it's actually a lot of fun and easy the way I teach it. Okay, so I love teaching with props. So when you're forecasting financial statements, it's easy. You start with revenue, okay? And you focus most of your time on forecasting revenue. And then the red expense items, for the most part, become a percent of revenue longer term. Look for patterns in the data. And then what you're doing is you're getting to net income. And eventually, you're going to value the company on a PE basis using net income. I also teach how to use a price to revenue, as well as discounted cash flow. I can go into more details on that if you want me to as well. Thank you. Okay. Next question is, if the PEG ratio of 1 is fair to justify a PE of 100, a company has to have the average earnings growth for 5 years. Please show an example of numbers in Excel. Absolutely. So let me take a step back and first of all teach you how to value companies on a simplistic basis using PE, which is the best way to value companies. So first of all, the S&P 500 historically trades, I'm going to use very rough numbers here, okay? The S&P 500 historically trades at a PE ratio around 15. And the average S&P 500 company has earnings growing at about 15%. So if we take price earnings of 15 divided by growth of 15, that's a price earnings to growth ratio of 1. PEG, price earnings to growth, okay, of 1. Remember that number. Now, if a company in the S&P 500 has earnings growing at 20%, it should probably trade at 20 times. Now, if a company in the S&P 500 has earnings growing at, say, 10%, it should probably trade at 10 times. So the best way to value companies is to forecast financial statements out at least 5 or 10 years. And then what you're going to do, and I will show you an example in a second, is you're going to value the company based on your earnings estimates in 5 years. Okay, so years ago when I worked in the hedge fund industry, people used to say, Chris, you're crazy. You own Amazon. It's 100 times earnings. That's a widowmaker. And I would say, no, I'm not that crazy. But it's actually trading at only 3 times my earnings estimates in 5 or 10 years. Okay, and the smart investors, not that I'm smart, but the smart investors look out longer term like that. Don't ever value a company based on this year's earnings or last year's earnings. Everybody does that. Look out 5 years. And as Warren Buffett said, the longer the view, the wiser the intention. In fact, when Warren Buffett buys a stock like Coca-Cola, he bought around 1990, still owns today, he always tells himself, I'm assuming the market's going to be closed for 10 years after I buy this. Otherwise, you make the cardinal sin of doing this. Buffett said, the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Think about that. Now let's go to the financial model and I'll show you how to do this really quickly. Okay. And again, all this stuff is available to my clients. All right. So what you do is step 1, you forecast revenue. Okay. Step 2, you forecast the income statement. Okay. And then what comes out of that for value on a PE basis right here, what comes out of that is you've got earnings growth. So let's say I've got earnings growth, in 5 years from now, okay, just assume it's 5 years from now, of 21%, okay? That means if I want to value the company at a PEG of 1, then that's going to be the target price right here is going to be $36, which is 21 times 1.74, okay? So that's how you do it if you're using a PEG of 1. And if you have follow-up questions, please let me know. So in 5 years, whatever company we're analyzing here should have a target price of that. You can certainly discount that into today's terms as well by using your cost of capital, or you can use the 10-year treasury or 1-month treasury if you want to. It's all debatable. Yeah. All right. All right, next question I've got here is, what about making an automatic alert program? For example, be notified if some companies lose 20% of stock value or more over some period. Absolutely, you can do that. And what I actually do is I also click create Google alerts. So if you go to alerts.google.com, and this is great if you're interviewing with a company too, and you want to know immediately when news comes out on a company. Let me show you this real quick. So let's go together to alerts.google.com. Okay, and you have to have a Gmail account, which is free. So for me, I analyze all this stuff. If my name comes up, whatever, all that stuff. And I also have this one here. Okay, now, when it comes to insider trading, it's wrong, of course. Don't do it. However, for some reason, the media is allowed to have insider information, not insider trading, right? And so the media is allowed to find out about stuff. It's just weird. It is what it is. And the media usually says, according to people familiar with the matter, X company might be buying Y company. And so what I did here is I created alerts, all in quotes, according to people familiar with the matter, and then the name of a certain company. I'm not going to tell you which one, but this is how I monitor stuff right here. Yeah. You can certainly set up alerts as well to let you know when the price of a stock drops materially. Now, my favorite stocks or companies to invest in are broken stocks, but not broken companies, meaning stocks that are materially oversold from a relative strength perspective. That's technical analysis, and that's after I look at fundamentals first, valuation second. Yeah. Okay. What about investing in ARKK or VUG instead of NVIDIA, Datadog, and Cloudflare? Yeah. So I will never tell you what stocks to buy, and I never want you to listen to me in terms of what stocks to buy or what anybody says on television, like Jim Cramer, etc. Okay. What I like to do is this: I provide my clients, anybody that signs up for my MBA program on my website, to use this template. And what this template is, it's based on my experience at Goldman, working in the hedge fund industry and venture capital industry. What I do is I ask you about 100 ways to invest in stocks: qualitative research, quantitative, and financial. You answer 700 or 800 questions, okay? And I've got a video on each one, on each tab. And I teach this from scratch. Then what you're going to do is you're going to forecast the income statement, yada, yada, and come up with your target price. And what comes out of this is a one-page executive summary, as well as a massive detailed report like you see on Wall Street, and also a dashboard. And you can bring this to your informational meetings. In fact, if you're interviewing for a hedge fund or a finance job, you can even print this out and put this on the back of your resume, this one pager here. Yeah. And I'm in the process right now of actually creating, let me see if I can show you guys this. This is a little bit behind the scenes. My next course, I got up at like 3 this morning to record it. It's called Ace Your Finance Interview. Okay. And the exercise book that comes with it is 150 pages. But this is coming out very, very soon. I'll probably talk about it on future webcasts as well. Let me get back to your questions, though. Thanks. Okay. Okay, Ray wrote, you recommend having 20 stocks, but how many ETFs is reasonable? Yeah. So if you're going to invest in individual stocks, I want you to have at least 20 in your portfolio. Okay, I don't want any position to be more than 5% of capital in your portfolio. And that's just good risk management. Okay, and I don't care if the company has a cure for cancer. Like, I want you to just be a good steward of capital, so to speak. Now, in addition, I don't want you to have more than 20% of capital in any one particular sector, like technology, healthcare, industrial, cyclicals, energy, whatever it is. Now, when it comes to ETFs, of course, you can have more than 5%, right? So for me, and this is my go-to ETF I buy when I don't know where to put my money, do your research first. But I usually buy the VOO, ticker VOO. Right, and that's an ETF for the S&P 500. The fees are really, really small at 0.03% versus 5% at a lot of mutual funds. Mutual funds are a scam. Don't invest in them, please. Okay. Next question is, what sectors apart from AI, biotech, green energy will be more relevant in 5 years? So if I choose ETFs in those, wouldn't I get better profitability instead of buying the S&P 500 ETF? Yeah, the S&P 500 ETF is lower risk, generally speaking, because as I mentioned at the beginning of this webcast, I think the very last company, so to speak, that will ever go bankrupt is U.S. government. And I think that companies in the S&P 500 are managed much better than the U.S. government manages itself. Yeah. So what I like to do, and I know what you're quoting there, is whenever you look at investing in a company or a theme or a sector, you start by asking yourself this question. In 5 years, is this company or the sector it's in going to be more relevant or less relevant than it is today? And that's a good sanity check because it stops you from getting seduced into buying value traps, meaning stocks and sectors that are cheap for a reason. Now, if you want to invest in ETFs that express a certain theme, as I mentioned earlier, you can always go to, sorry about that, guys. You can always go to etfdatabase.com. Okay. And then here, just look at different themes, right? So you go to ETF screener and you can look at themes right here, right? You can look at lithium, you can look at AI, you can look at tons and tons of different stuff. Yeah. All right. Cool. Okay. Okay, there's a question about Udemy. Now, when Udemy went public, so Udemy is one of the places where it's an indirect distribution channel for some of my products. I sell direct on my website. I don't answer questions about Udemy just because there's a conflict of interest. Yeah. And I sign an NDA with them as well. Yeah, so I'm not going to go there. Yeah. But I do love the company. Okay. All right. And then Ray wrote, when a founder was CEO and is now executive chair or board member, does it mean he is no longer focused on the company? Sort of, a little bit. Like Jeff Bezos is, like Andy Jassy is now the CEO of Amazon, which is the right choice because he created AWS. But Jeff Bezos is somewhat involved, a little bit less so. And I become a little bit less bullish on a stock if the founder is no longer 100% involved, right? Like, for example, Elon Musk, who is essentially the founder of Tesla, right? So I was less bullish on Tesla when Elon bought X, Twitter, and also when he was involved in DOGE, right? But I might get very bullish on it very soon. Do your research first. Yeah. And when a company starts becoming a little bit less relevant, it's usually game over. Okay, I understand that. Turnarounds usually don't work in tech. Maybe one per decade does. But if a company like BlackBerry or Yahoo, whatever, the second it starts becoming a little bit less relevant, it's usually game over. Yeah. And quite often that occurs if the founder steps away. Now, when the founder steps away from a company, I don't invest because bureaucracy sets in. And if you're a CEO of a company, you're not the founder. You're slaves to quarterly earnings. So you're short-term focused. But if you're the founder of the company, you're still running it. You don't care about quarterly earnings. You're very long-term focused, and that's the way to properly manage a company, in my humble opinion. Okay. Next question is, would you invest in Vietnam and Poland? Yeah, absolutely. Absolutely. I've invested in most major markets. Two markets I won't invest in include Russia and China. Okay. And it has nothing to do with trade wars and stuff. It's just because of the accounting. And that's not me stereotyping Russian people or people from China. It's just the accounting system. So, for example, years ago, I got burned investing in Lukoil and Gazprom, the biggest oil and gas company in Russia. I did due diligence on it. I saw, oh my gosh, look, the PE is only 3 or 4 times. Those numbers were rubbish. They were wrong. Yeah. Okay. And then you wrote, when you say Vietnam might be a good country to invest in, yeah, and I don't remember saying that, but maybe it could be because when institutional investors might put their money in Vietnam instead of China, for example, then yeah, you can look at the Van Eck Vietnam ETF, absolutely. Now, when you look at ETFs, make sure that the fee is usually less than 50 basis points, meaning 0.5%. What that means is this: you're going to pay 50 cents in fees every year for $100 you invested. And also, you want to make sure that it's very liquid, okay? Because illiquid stocks own you in a down market versus vice versa, okay? My marketing folks are telling me to have everybody please click the like button and subscribe and all that stuff. Thanks. Okay. Ray wrote, Uber has a PEG ratio of 0.64. Isn't that a clear buy, provided the steep growth of EBITDA or the fact that the founder is no longer leading should stop me? Yeah. Once Travis stepped aside for obvious reasons, you can watch the TV show Super Pumped for more details on why. That got me a little bit worried. However, if you think the PEG ratio is 0.64, that sounds like a screaming buy to me. But that's not based on my estimates. That's based on your estimates. Yeah. If you think that's the right number, then it's probably a buy. Of course, you have to look at all the pros and cons and the risks, etc. And you got to look at future growth opportunities for them, especially with Uber Eats and distribution of other products, etc. Autonomous vehicles and all that stuff. Yeah. Okay. Yeah, and Ray, ask as many questions as you want, please. I love these questions. This is fun. Yeah. I don't have a job. I have a passion. I truly enjoy this. All right. Javesh wrote, hey, Chris, hey. I always look forward to this part of the week. Thank you. And he wrote, thanks for the insight you share. Thank you for being here. It feels like the markets are reacting more to the moods and headlines than fundamentals lately, which doesn't seem sustainable. In other words, are there investment strategies that can hold steady no matter what's happening in the global economy? Absolutely. Absolutely. It's no surprise that whenever there's uncertainty, gold goes to an all-time high. Yeah. But I don't think of it that way. I think very long term, right? So I think 5-10 years from now, what are the best companies to invest in? And I don't give a darn if the stocks pull back. Actually, I want them to pull back. I want the VIX to go to 70, right? There's not that much fear out there, dude. Like the markets right now are still where they were, in the first half of last year. There's not much fear out there. But I don't care about the path. I care about the destination. So I'm always long-term focused. I don't care about day-to-day volatility. And you can't like people are losing their shirts trying to day trade. And so many times on this weekly webcast, I've said with love in my heart, and I've gotten down my knees so many times and begged you guys not to be a day trader, because there's so many black swan events you can't forecast. I don't know what Trump is going to say next. I don't know what China is going to say next. I have no idea what tweet or True Social mention will come up from Trump next. No clue. Nobody does. And that's why you got to be extraordinarily long-term focused. Read this book if you want to. It's called Black Swan by Nassim Nicholas Taleb, who's a fellow Lebanese. So my mom is half Lebanese. I think there's Scottish, Irish, French in there as well. And my dad is Egyptian. Very proud of my heritage. And people ask me, why do I use a blue screen back here? Why not green screen? The problem is, and I have to thank my wonderful grandmother who's up there with my little sister Katie and my grandpa. The reason why is because I have green eyes, right? And a lot of people from Ireland, I think I have Irish roots as well. A lot of people from Ireland, when they're in Hollywood movies, they have to wear contacts. Otherwise, you see right through them. That's why I use blue back here instead of green. Yeah. Okay. Next question Javesh wrote, is gold, and this is fake, is gold really the safest, or are there better long-term options for navigating this kind of volatility? Yeah, I usually have like 5% of my portfolio when I'm worried about global economy in gold. I think that's probably, relatively speaking, the safest investment. Yeah. If it weren't for a trade war, people might say U.S. Treasuries. Yeah. Okay. All right. Next question is, why isn't Fed Chair Powell cutting interest rates? Yeah. Is he avoiding some risk by keeping them high? Why do Trump and Powell seem at odds? What's driving the disconnect there? Yeah. So Trump is really upset because Powell was not cutting interest rates. And then, the markets were volatile because of that. And then the other day, Trump said, I'm not going to fire him. And the markets reacted positively. Again, another black swan that you can't forecast. The reason why Powell is not going to be cutting interest rates, and I agree with him, is because, as I mentioned earlier, if China and Japan sell a lot of treasuries, that drives up interest rates. Okay. Also, we're going to have higher prices in the future. Okay, we're going to have higher prices because of tariffs, obviously. So what do you do when prices go up and inflation occurs? You can't cut rates yet, right? You can't. If anything, it's the opposite. Yeah. Okay. All right. Next up, Tabo wrote, Sir Chris, please. You've always demonstrated with hand gestures as to how Trump would cut a deal with a nation. Do you think this still applies with China? Absolutely. Trump has blinked a couple times with China. I don't think that Trump thought that China would have also increased tariffs as much as they did. And it almost doesn't matter if either side increased tariffs to 10,000%, right? They're going to get a deal done eventually. But I don't think that Trump expected China to do what they're doing. Yeah. And he even, he was the first one to blink in terms of putting things on hold for 90 days for all countries except for China. And then he's kind of said, a couple Sundays ago, he was quoted in one of his press briefings saying that, computer component companies, there's stuff from China, maybe there won't be tariffs. And now he's talking nicer about China, saying how they will come to terms. Yeah. Don't focus on what Trump says, focus on what he does. Okay. Next up, I saw from the news that Trump is preparing to cut China tariffs by 50%, and negotiations have not even started yet. I think that only makes Trump seem irresponsible, in your opinion, as a president. Yeah. Well, he blinked first. Yeah. But we don't know. Like, to call a spade, right? And I didn't vote for Trump. I didn't vote for Kamala. I didn't vote at all. Okay. I'm more of a libertarian. Like, growing up in Canada in the 1980s, I loved Ronald Reagan. So I thought, oh my God, I'm a Republican. But it all depends on who it is, right? But we don't know, to be intellectually honest, okay? 10 years in the future, and some people are going to hate me for saying this, but I'm not emotional, I'm just logical. This might have been a good move. We don't know yet. Why might have been a good move? Because in the future, this might result in lower tariffs between the United States and 50 countries. Yeah. I just want it to be done tactfully with peace. I don't want this to lead to geopolitical tensions in certain regions of the world. Okay, next up, Ray wrote, how do we know where we are in the economic cycle? Yeah, so a recession, we might be in a recession right now, we don't know. But a recession is defined as 2 consecutive quarters of negative year-over-year GDP growth. Think of GDP sort of as being revenue for a country. We don't know. We don't know yet. Yeah. Okay. All right. Next question is, give me 1 second. Ooh, you guys are asking lots of questions. If I can't answer your questions live, guys, every week for my MBA clients, I have 3-hour office hours. In fact, I have office hours every single day, meaning Zoom calls, for my MBA Degree Program students. Now, let me show you how to learn more about that, and I'll move on. I don't want to make this an infomercial. Go to my website, harounmba.com, go to MBA Degrees, and then you can read more about these products. These products have daily small group Zoom meetings with me. That's 300 hours per year, plus 500 hours of online content, plus one-on-ones. If you want to learn more, just click here, learn more, book a call with somebody on my team. Yeah. Okay, let me go back over here. Go back to big picture Chris mode. Okay, great. All right, give me 1 second here. Yeah, so if I don't answer your questions, you guys can always ask me on my weekly Zoom. Give me 1 second, please. Okay, hold on a second. Okay, Ray wrote, I need to invest $500,000 today to support 40 years of withdrawals, starting at $36,000 annual, increasing 2.5% each year, accounting for inflation, with the expected annual return of 10%. Yeah, 2.5% inflation per year. That's fair. That's fair. Depends where you're located. I'm assuming you're in North America. That sounds fair to me, but you have to run through the numbers within Microsoft Excel to do that. I can certainly help you doing that. You can even copy and paste your question, put it in a chat GPT, and tell you what your monthly withdrawals would be in that case. Yeah. All right. Give me 1 second, guys. All right. And then Gaming Dojo wrote, F and hell. People started posting already. I'll try to answer all questions as fast as I can. Hey, Michael Boyd, how are you? Moving on to the Psych Life wrote, hey, Chris, have you seen David Senra's Founders podcast episode? I have not. Sorry. Next up, Tommy wrote, what are leveraged ETFs like TQQQ? What are your thoughts there? Yes, leveraged ETFs means that the way an ETF is put together is potentially with options and leveraging a lot of debt to borrow, meaning using margin as well. Don't do that. Yeah, it's too risky. Yeah. And also for those of you that invest in options, please don't ever underwrite options being sell them because you can lose way more than what you invested if you're randomly assigned. I can talk about that in more detail if you want me to. All right, next question is, if you want to invest $5,000 in QQQ, meaning the tech stocks within the NASDAQ, these days, how would you apply dollar cost averaging? Will you divide the amount into 5 transactions of 1,000 and buy over 1 week or something else? Yeah, so I think about it more simply. So Warren Buffett said you want to spend what is left after saving instead of saving what is left after spending. As such, what I recommend everybody do if you can, and times are tough, is every paycheck you get, I want as much as you can taken out of it so you can live comfortably and put directly into your retirement savings program account. And if you work at a big company, you might be able to call HR and ask them, do you have any 401k matching programs in place? Are there funds I can invest in and get company to match the investment I made as well? Yeah. And talk to your accountant always. Always have an accountant. Never do your own taxes, please. Yeah. Okay. Next up, Ray wrote, Ethereum has lost a significant amount of value recently. Yeah, so anything risk-oriented is down a lot for obvious reasons, right? Ethereum has lost a significant amount of value recently, and that makes it seem like a good buying opportunity from the perspective. What's your opinion? Yeah, I'll never tell you what to buy, but I've disclosed for many, many years the 4 cryptos that I own, and I haven't sold, and I never will. Ethereum, Litecoin, Ripple, and Bitcoin. Yeah, always do your research first. But I never want you guys to have more than 5% of your liquid net worth in cryptocurrencies. And of that 5%, I don't want any crypto to be more than 0.5% of your net worth. And the reason I say that is because unlike stocks, which are regulated by the SEC, cryptocurrencies are not really regulated by anybody really yet, right? Before you invest in a stock, I can read the S1 filing, right? The Investment Banking Offering Memorandum. With cryptocurrencies, that doesn't exist. And as much as I love Bitcoin, I'll call a spade a spade. I tend to have to agree with Jamie Dimon, the brilliant CEO of JP Morgan, probably the smartest guy in finance on the planet, one of the smartest guys. He says about Bitcoin, how do we know there's only going to be 21 million Bitcoin ever created by the year 2140? How do we know? We don't. And that's why I say limit your investments in cryptos to 5%. By the way, if you ever get a message from somebody pretending to be me, telling you to invest in cryptos for me, it's not me. Yeah. All right. Next up, Yipping wrote, oh, hey, Yipping. Hey, Chris, with the Canadian election just around the corner, can you summarize it and winning odds of conservatives, liberals, and what's the economic implication of the different outcomes in Canada? Yeah. So I think what's going to happen is I think the liberals are going to win. I think Carney's going to be prime minister. Although I'm conservative, I am. Okay, I wasn't a big fan of Justin Trudeau. I went to school, and I can tell you a story about him as well. Funny story. But I think what's happened is whenever there's a war situation, like a financial war or any type of war, public approval goes up a lot. So after 9/11 in the United States, Bush Jr.'s approval rating went to 90%. And given, Trump's trade war with Canada, it kind of gave more approval to Justin Trudeau when he was prime minister. Like, I started to like him more when he was standing up to the United States, right? And for Americans on this call, please understand that Canadians, when they boo the national anthem, okay, which breaks my heart, they're not booing America. They're booing the trade policy. That's it. I think liberals are going to win. I do. Yeah. Although I'd love Pierre Poilievre to win. Yeah. Okay. And Mark Carney is great too, because he used to be the head of the Bank of Canada, the head of Bank of England. He understands how to run an economy, I think, even though he's a bit too left-wing for my taste. Okay. All right, next up, N.A. Keane wrote, Bonjour, Coach Chris. Bonjour, je veux faire de grasse matinée. You wrote, what are the key risks and rewards of selling covered calls, especially in a volatile market? Yeah, I don't want you to do that, okay? I don't want you to sell any options ever, okay? Buy options if you want. Buy puts and calls, because the most you can lose is what you invested, right? If you're underwriting, meaning selling these things, I know that you might be protected on the other side of the trade, but there's still a risk that you can be randomly assigned. Yeah. Run a paper portfolio for at least a year and assume you get randomly assigned to 10% of those positions. Okay. And then Matan wrote, which exercise are you talking about earlier on? Yeah. So for me, it's walking. Okay. It's as well as weights. I have a gym in my garage. And for those of you that have teenage boys, my kids are great, but there's a lot of temptations. Okay. When I was younger, it was alcohol, whatever, it's fine. But there's a lot of temptations. And I recommend, I'm always transparent. And my kids are great. There's no issues. But get a gym at home if you can. Put it in the garage. Get your kids to really enjoy exercising. If they treat the body like a temple, they won't be motivated to do other things. And when one teaches, two learn as well. Yeah. Okay. And Antonio wrote, Chris, you're awesome. I relate to your story. Thank you. I'm honest to a fault. Okay. And then Arda wrote, hey, Chris, thank you for your live sessions. They're very helpful. My pleasure. Thanks for being here. Yeah. Yeah. Eileen, good to see you. And Eileen, I connected with your friends regarding building that orphanage in Africa. Yeah. And I give her all my courses free, everything, for everybody in her charity. Thank you. All right. Moving on to Manos from Calcutta, who wrote, good morning, my dear mentor. Chris, please, let's go for another week. Amen. You wrote, odd question and out of topic. How did you feel when you started the MBA degree programs? Were you scared and afraid because you were a big hedge fund guy and were afraid of leaving a ton of money? Yeah. The second you make money your master is the second you'll never be happy. Okay? Don't make money your master. If you chase money, you'll lose your money and your dreams. If you chase your dreams and you don't give a darn what people think of you and your choices in life, and you don't mind failing, you're going to be successful. Your dreams will come true and the money will follow accidentally. Michael Jordan said, I failed over and over again in my life, and that's why I succeed. So take risks. The biggest risk to limiting your success, our success, is not taking risk. And don't give a damn what people think of you as well. Yeah. I just want to help people. I like teaching. Next question is Lay wrote, what's an earnings call? Can you describe what happens and how? Absolutely. So companies report earnings 4 times per year. What they do is they issue a press release, usually at 4 p.m. New York time, sometimes before the market. opens. And then what they do is around 4:30 p.m., they hold an earnings call. It's a webcast that by law everybody has access to. And the way the call works is, first of all, the CEO talks along with IR. CEO says we had another great quarter, even if they didn't. Then the CFO talks, and they might give guidance on what's coming next quarter in terms of numbers. Then the Wall Street analysts ask questions, and you need to listen to those questions. Yeah. And then update your model that way as well. Okay. Next up, why should we bother to understand the fundamentals of a company only to understand on a later stage that EPS is going down? Should we first make some basic financial analysis before fundamentals? Yeah. Yeah, you can, but I don't want you to ever invest in a company because you think they're going to have a good quarter, this quarter, next year, the year after, whatever. I want you to think very, very long term. And the best way to explain this, and I'm not going to go into much detail on this because I've talked about this in prior webcasts, is to use this product here, which is available to all my clients. Yeah. Okay. All right, next one is Tesla missed earnings and also profits dropped 71% year over year. But the concern was Tesla was made on the back of subsidies and green credits, which Elon and Trump are reducing left and right. What are your thoughts? Yeah. So the way I look at it is I don't think of the next 3.5 years. Okay. I think of 5, 10, 50 years from now. Right. Will electric vehicles be more in demand or less in demand? More, I think. Yeah. So in the long run, I am bullish. Yeah. Okay. Ray wrote, if you follow 20 companies, would you read daily news about them? How are you subscribed to Google Alerts? Yeah, you can definitely use Google Alerts. What you can also do is you can go to Yahoo Finance, go to finance.yahoo.com, create a portfolio for free, right? And then what you can do is you can read the news every single day for those companies. And what you can do is at 4 p.m. New York time, just keep hitting refresh to see if press releases come out. Yeah. And those press releases also hit sec.gov. Don't pay for any service. I took my first sponsor on my channel. I told myself I'd never do it, but Seeking Alpha was a sponsor of mine, and I ended it pretty quickly. Yeah, because what they do is I found out that it's a great platform to do research, but they also provide advice. And I don't want to be that guy that is, that is biased. I don't want to make it about money. I want to make it about you. You're always my customer. It's kind of like when you go to a video game website and you see that there's a great review on Halo, right? Most of the new Halo games suck. Well, who's the biggest advertiser? It's Microsoft. That's not going to be me. I'm never going to be biased. Yeah. Okay. Next up, Eileen, who's got the most wonderful last name, which is Deo Gracias, which is thank God in Spanish. Eileen wrote, I want to thank you so much for speaking with my friend, Maria. She said she's so grateful for your time. She's digging into the program. She's a good one to pour into. Awesome. Thank you. And thank you for the introduction as well. Moving on to Sean, who wrote, good morning, Professor. Hey, Sean, good to see you. Sean's in one of my MBA programs. He wrote, thank you for your inspiring, to me, read of the S1s. They're not boring to read at all. Also wondering, what are your thoughts on delta neutral strategies like straddles in a volatile market? Yeah. So I actually don't mind. Yeah. But you have to look at implied volatility versus historical volatility. In your MBA curriculum, go to FA44. For 30-hour course on options. That's Finance and Accounting Semester 4, Class 4. But for those of you not familiar with the straddle, it basically means you're hedged on the position. So if the stock goes down a lot, you're not going to lose money and vice versa as well. Why would you do this? You might do it because you're in a position you don't want to get out of in a short period of time for tax reasons, whatever. Or you don't know if earnings are going to be amazing or brutal. So you just kind of hedge yourself, right? Yeah. But again, you have to look at, as I explained in the curriculum, implied volatility versus historical volatility. Yeah. Okay. Next up, in today's economy, what are the most realistic ways someone in their mid-50s with no savings and low income can start building wealth? Yeah. So a couple things. Number one, the average life expectancy today versus the 1950s is 26 years longer than you think. So although I'm 53, I'm actually 27. And there are people on this webcast that will live well into their 150s, I promise you. Now, it's never too late to start saving. The first thing I recommend doing, if you can, is buy a house. Okay, and if you're in my MBA degree program, you can always go to the last lecture of your curriculum, to check out the complete real estate elective, which is only available for my MBA students, not on any other platform. Let me show you a quick example that's going to change your life and everyone's life on this call when it comes to the future value of money. Okay, so let's do a quick exercise together. Okay, so let's say that you rent, okay, and you spend $2,500 a month renting for 50 years, okay? And let's calculate how much money that's going to be wasted, okay? And it's hard to buy a place. It took me until my 30s to buy. I bought right after 9/11 in New York City because it was scary. No one else was doing so at the time. So that means that $2,500 per month times 12 years, or pardon me, times 12 months times 50 years, that's $1.5 million, okay? So that's how much money you're spending. Now, if you invested in real estate, right? So for example, if you had residential investment real estate and you're renting properties, let's just say that with tax savings and appreciation, et cetera, that would net 15%. You know what that means? The math behind that is this. That comes out to $345 million over 50 years. This is the time value of money. Now, before you buy your real estate investment, I want you to take this course, okay? And what I do is I ask you a gazillion questions, and then what comes out of this is a one-page write-up for you and a detailed investment due diligence report before you buy. Okay. All right, let me go back here. Let's change camera angles. Okay, great. All right. Next question is, you say broken stock, not broken companies. How do you recognize that? Yeah. So a broken stock means a stock that's massively oversold. It's gone down a lot, probably because it has a higher beta and everybody is panic selling. But it's not a broken company if the fundamentals have not changed. I love that. I love investing, staring fear in the face and buying stocks that feels like you're catching a falling knife. But they have to be broken stocks, not broken companies. And the way you know that a stock has found a floor and is not going to likely go down in the future is if multiple negative data points come out on a company, like they miss earnings and the stock doesn't go down. One data point doesn't make a trend. It's got to be a couple data points, right? That means that all the sellers are exhausted. By the same token, if you own a stock that everybody loves and they kill earnings, they beat earnings by a lot, and positive news keeps coming out and the stock doesn't go up, it's overowned. Okay. Okay, next question is, can you go into detail about Gazprom if you're okay? What happened? Because I've been following it for a long time on Yahoo Finance, as you recommend what happened, how, why, and thank you. Yeah, it was years ago. So I invested in Gazprom and Lukoil, Russian stocks, because I thought it was 3 times earnings, but those were lies. Yeah, you cannot trust that accounting. And again, that is not a knock on Russian people. It's just the accounting system. I just don't trust it. Next up, Apple is a value company now. Okay. Also, about where are iPhones going? What is the future of Apple? Because since decades, it is doing the same stagnant. Yeah. It's a tricky one because Apple is not really innovative anymore. Okay. Since Mr. Jobs passed away, God bless him, they haven't done anything innovative. They made a smaller iPhone, smaller iPad, bigger iPad. They've kind of upgraded Apple TV, which Jobs created. Apple Watch was created by Johnny Ives when he was still at the company, when Steve Jobs ran the company. And they did Vision Pro, which has been an absolute disaster. And so it's part of my thesis, which is whenever a founder leaves a company, innovation dies. Yeah. Will they be okay in the long run? Look, I think Tim Cook is the best COO, meaning operator, on the planet. He used to be COO, now he's CEO, of course. Right? I think he's brilliant. I do. And I think what's going to happen with Apple longer term is Foxconn's biggest operations will end up being in India. And so what's going to happen longer term is India is going to become closer and closer friends with America, right? And a lot of the production in China is going to move to India. And India, I think, is one of the most important countries on the planet. It's the world's largest country by population and the world's largest democracy. Yeah. And I despise communism. Okay. All right. Next question. Hey, Diego. First time I've seen you. Diego Corbello from Blue Summit Capital. Hey. Hey, Chris, have you ever been involved in alternative asset management? Yeah. So I worked in the hedge fund industry for years. I worked at Citadel, Pequot, Kingdon, my own hedge fund. Worked in venture capital as well. So those are alternative assets. Yeah. And then next up question is, You say day trading is bad. Yes, it is. And you wrote, but Goldman and JP Morgan do day trade all the time and win most times. Why so? And also, do they have an advantage, as you taught in EMS 2, Economics Management Strategy 2? Maybe, yeah. So there's an ethical wall at Goldman Sachs. So I know what you're leading up to there. So that the investment bankers cannot talk to the trading floor. Now, some of the prop traders do well, and they focus just on one sector. Right? It's very hard to do. So on a trading floor, you see on television for Goldman Sachs, UBS, Morgan Stanley, et cetera, you have prop traders, proprietary traders that'll trade one sector, like energy, Latin American stocks, retail, et cetera. Yeah. But it's hard. It's very hard to be a day trader. Yeah. And I would say they're probably not day trading. They're probably looking a couple months out, maybe swing trading a bit. Yeah. But they also have flow, right? They understand the big institutional investors, plain vanilla investors, et cetera, who's buying what in size, et cetera. Yeah. So it's almost like an unfair advantage. Okay. Next up, Powell is a smart guy, hands down, but his term is ending soon, next year actually, and Trump knows that too. Also, who will be his pick for Fed chief? I mean, just asking his own guy or a smart guy in general. Probably one of the Fed board governors. I think there's like 7 or 8 of them. He'd probably pick one of those. Yeah. Or he might stick with them as well, so he doesn't upset the capital markets. And he kind of implied he's going to do that as well the other day by saying, I'm not going to fire him. And then he wrote, Scott Bessent has an undergrad in political science. How did he crack finance and went on to become the right-hand man and break the Bank of England with Stanley Druckenmiller? Yeah. So at that point in time, Stanley Druckenmiller worked for George Soros. Okay. And so they both learned a lot from Soros. Now, George Soros, and I have a lot of friends that I know him too well that worked for Soros. Soros is not a good stock picker. But Soros is brilliant when it comes to fixed income trades and currency manipulation. So he made $1 billion in one day back in the 90s. By forcing the Bank of England to float the pound sterling, right? It used to be fixed to a basket of currencies in Europe as well as the United States. He also made $1 billion in one day by forcing the Thai baht to float. It used to be fixed. Like in Thailand, a lot of people don't like Soros. Yeah, I'm not a big fan of his politics, to be honest. Okay. But that's a great place to learn before becoming a Treasury Secretary, that's for sure. Okay. And then Diego wrote, by the way, your How to Stop Worrying video saved my life. Thank you. Thank you. And people very close to me told me not to publish that video. Let me show you which one it is. I'm actually very proud of it. And what I'll do is I'll actually drop a link here in the chat if you guys want to watch it. So let me go here to my we just cracked 1 million views on one of my videos. Yeah. All right, let me go here. Where is it? How to Stop Worrying. Yeah. So I'll put this here. And this is actually an excerpt from my MBA program on my website. I talk a lot about personal growth. So I dropped the link in the chat. You guys, for some crazy reason, you guys are not allowed to put links in. YouTube doesn't let you, but it lets me for some reason. Okay. All right. Thank you for that. Diego, set up a call with me, dude. Please. Go to my website here. Just go to my website, HarounMBA.com, and book a call. Okay. And if somebody on my team takes a call, say, I want to talk to Chris. Okay. Thank you. Okay. All right. Next up, N.A. Keen wrote, what advice do you have for someone who feels lost trying to build a wealth later in life with limited resources and no clear plan? Yeah. Yeah. Book a call with me as well. Go to my website. Yeah. And if you get one of my staff, I got a bunch of employees, just request to have them transferred to me, please. Yeah. And Eileen wrote, also as a Catholic, like I am, I'm sad about the passing of Pope Francis. Yes, I am too. And, I don't agree with all of Trump's policies, but I did like the fact that he wanted to fly the flags at half-mast. Yeah. And then he wrote, but maybe there's a chance that the next Pope is Filipino. I know you're from the Philippines. Did you watch the movie The Conclave Fast? I have not yet, but it's so funny because Eileen, who's one of my MBA Degree Program students, she grew up with the priest in my church, actually. She grew up with him in the Philippines, and he happens to be my priest, my church here at Our Lady of Angels. Yeah, small world. Moving on to N.A. Keen, who wrote, if you don't recommend day trading, What do you think about using covered calls as a strategy to generate income and build wealth over time? Again, I'm adamantly against any investment where you're going to be selling options. Yeah. Okay. And then next up, Manas wrote, Steve Schwartzman has $400 million worth of put options on SPDR for leaps. How do these big people know everything beforehand? Is it experience or something more? And you wrote, he's a cool guy. I don't know. I don't know what his investment methodology is. Yeah. Strange that he would disclose that. Yeah. Maybe he has long exposure and he's hedging himself. Okay. Eileen wrote, also, I'm curious about the Vatican Bank. There's an article that Pope Francis spent a lot of his time cleaning it up and removing corruption. Yeah. I don't know much about that. I'm so sorry. But the reason why there's a lot of, a lot of private schools and a lot of schools in North America have churches on campus. And the reason is so they get a tax break. Yeah. So I'm sure there's some corruption there as well. Moving on to AeroX, who wrote, hey, Chris, hope all is great. Great to see you. How do we navigate this bad job market when trying to return to the finance industry after a few years in a basic IT job? Yeah. And I've got a killer course coming out soon, actually on May 1st, I think, on my website on how to ace your finance interview you'll love. Now, the bottom line, and I'll answer this generically for everybody. Every time you see a job opening online, you have a 1 in 250 chance of getting that job. So who gets the job? Well, it's always the dude that knows somebody at the company. So that's the only way to do it. So step 1, make an amazing LinkedIn profile. And my team and I can help you do that. Just go to the link in the description of this video to learn more and set up a call with us. Step 1, set up an amazing LinkedIn profile. Step 2, send emails out to people that have a couple things in common with you and set up informational meetings with them. Okay? Don't say why you want to meet. Just set up the meetings. And I'll explain how in a second. Then in the meetings, you're going to bond before business. You're going to talk about what you have in common first. Then you're going to very nicely find a way to ask them. And remember, closed mouths don't get fed. So you have to ask. Ask and you'll receive. It's prophetic. It's been true since the beginning of time. You've got to set up a ton of informational meetings. Okay, you only have to be right in business one time. So the way you do it is, again, step 1, have an amazing LinkedIn profile. We can help you with that. Step 2, you do an advanced search on LinkedIn and find people that work at finance companies that have a couple things in common with you. Maybe they're from the same hometown, member of the same organization as you, or they went to the same school as you, etc. And you send them a message. And the message is very simply this. Don't send emails, only in-mails, because every in-mail you've all received, you've read. The subject line of the in-mail, it can be the word hi. It doesn't even matter. They're going to read it. The contents of the message are something along the lines of, John, hope all is well. I'm also from Mississauga. I also went to Toronto French School. I also went to McGill, and I live in the Bay Area. Please let me know if you have time for a quick call or coffee. Thanks a lot, Chris. That's it. You don't say why you want to meet. If you do, they're not going to take the meeting. And there's nothing unethical with not saying why you want to meet. And don't ever on your LinkedIn profile have a picture of yourself that says open for work, because they're not going to take that meeting with you. And if you don't believe me that they're going to say yes to a meeting to you, think about it this way. Imagine it's 20 years in the future and you're 20 years more successful than you already are today. And somebody reaches out to you that reminds you of yourself. And they say, John, hope all is well. I'm also from Mississauga. I also went to Toronto French School. I also work in the finance industry and I also live in the San Francisco Bay Area. Please let me know if you have time for a coffee or a Zoom call. Would you say yes to that? You're darn tootin' you would. Of course you would. So have the guts to ask. Rinse, lather, repeat. Do this over and over and over again. I promise you it works. Your network is your net worth. Relationships are more important than product knowledge. And in my MBA Degree Program coaching services, I teach you a lot more tips and tricks about how to network. Yeah. Okay. Next question is from Brandon. Hey, Brandon, who wrote, hey, Chris, how do I know what I'm passionate about and not just really good and deeply want to do? Yeah. So what I would say is this. Okay, so I'm going to give you all 30 days off starting today. Now, for the next 30 days, you're not allowed to work. You're not allowed to go to school, and you're not allowed to travel. What are you going to do with your time? Whatever that is, That is your passion, your raison d'etre, and you have to go after it. And I don't care if people say that's not a good way to make a living. Now, my humble job, the reason I do what I do, the reason I exist, is I think of myself as your waiter. When you go to a restaurant, you look at the whole menu. You only order one or two things. That's my job, is to expose you to tons of different types of careers on this menu. And then you choose what you're most passionate about. You can also set up informational meetings with people you have something in common with that work in different industries and just ask them what a day in the life is like. And I did that years ago. So my older brother, Jamie, who's my hero, he's a doctor. Like my father, they're both radiologists, which means they fix radios. That was awful dad humor, I'm sorry. And so I thought, well, I don't want to be a doctor. Maybe I'll be a lawyer. And so I started setting up informational meetings with lawyers. I went down to Harvard Law School to check it out like I'd ever get in. And then I met with tons of lawyers. And I came to the conclusion, I can't answer this question. I couldn't answer the question of, are you a jerk before you go to law school, or is that something they teach you in law school? So that wasn't my passion, but I kept searching for it. And eventually I really found it, which is teaching. And Tony Robbins convinced me to do what I'm doing today. And I can talk more about that if you want me to. Okay. And then Jesse wrote, an increase in Bitcoin supply cap will require majority adoption across both users and miners. Yeah. Kind of reminds me of the 51% attack. Yeah. All right, Mallory, how are you? Mallory is one of my MBA students. She's great. And on the weekly 3-hour Zoom call she's part of, she's going to show us her incredible Instagram post. And Mallory, if you want me to share your Instagram post, let me know. So she's really into cooking, and so she does a lot of cooking stuff. By the way, if you guys want a vlog, okay, I'm going to show you the best tool I've ever found for vlogging. Okay, so this here is an incredible product. If you guys want me to provide the link with it, I'll give it to you. Don't get the DJI Osmo; it sucks. Okay, so this product here. Okay, so it's a great product. What you can do is you can flip it around this way as well, and it's got a follow feature as well. So for those of you guys that watch my Instagram videos, I use this product a lot. If anybody wants the link, I'll put it in the description as well. It's a lot of fun. Oh, and it's got a teleprompter as well. So it might look like I know what the hell I'm talking about when I do my Instagram videos. Follow me on Insta if you want to. I don't know what I'm talking about. I'm just reading something. Yeah. Anyway. Fun. I'm a nerd with all this technology stuff, eh? Okay. All right. So Mallory wrote, hey, Chris, crypto-related question. Sure. I understand why you say only invest no more than 5% liquid assets, but what about taking some risk if you believe Bitcoin, for example? I'm worried that if I sell that, I can't buy back. Yeah, just once you fill out, so you're in the MBA curriculum right now, and I know what you're watching. You're watching the cryptocurrency dashboard one, where I teach you how to make an S1 sort of for cryptocurrency, meaning 49 investment steps. You're going to come up with your own target price. If you see it's materially higher, then buy that 0.5% position if you want after you've done your research, and never sell it until it reaches your target price. It's that simple. No trading. Long-term focused. Yeah. And the great thing about doing these one-page write-ups or investment write-ups, and I provide you guys with templates for everything, is what you do is this. You do an investment write-up. It's one page. Okay. Then you buy the stock. Okay. And you file it away. And let's say a year later, the stock or crypto or asset, whatever it is going down a lot. You're like, oh my God, I want to panic sell. Go get the one pager and read it and tell yourself, okay, the stock, for example, is down a lot because of X reason. Going back in time, when I wrote this one pager, if I knew about X reason, would I still have bought the stock? If the answer is no, sell it. If the answer is yes, buy more, as long as it's not a full position. Yeah. Okay. And I help my students work smarter, not harder, by providing you with all these templates. Yeah. Okay, Lorette, how are you? Awes, how are you? Welcome to the house of Habibi. Good to see you. You wrote, good evening from Norway. Oh, you're Norway. Excellent. Very cool. Thank you. Okay. And then Manas wrote, where do you see cryptos going from here? Trump loves them, but the market is scared. Why are markets waiting for rate cuts, shoe drop? And what do you think about it? Also, do you have a 10-year view on cryptos? Yeah. I'm very long-term focused, right? So I think that at some point in my life, I don't know when, I think Bitcoin will be $1 million per coin. I really do. In terms of where do I see the markets, I have no idea. I mean, what's going to make the markets go up or down in the short term is a black swan of, I have no clue. I just don't know. But I do know with a high degree of confidence that the stocks I've done a lot of due diligence on are going to be much higher. And I like to invest in what I call 5x5s, meaning stocks that have a 500% return within 5 years. The way to do that is to look at small and mid-cap stocks, build out your financial model, fill out the templates I provide you with, and then buy and hold. Yeah. So I don't really care about market volatility. I'm very long-term focused. It's like Warren Buffett. He's just extraordinarily long-term focused. Yeah. Okay. Carolyn, how are you? Carolyn is one of my silver MBA students who lives in Canada from France originally. You wrote, good morning, Chris. Thanks for your tips last week about my business proposal. Very helpful. Excellent. Very cool. Excellent. So your crepe business you're selling, I think, through a private equity firm or something. Yeah. Yeah. And then Carolyn is in silver. So for those of you in my MBA program, every single week at 10 a.m. Pacific time, I do my Zoom webcast. Yeah. And if you want daily Zoom calls with me, just go to the link in the description to learn more. Yeah. Okay. All right. Manos wrote, MicroStrategy has raised a ton of money from preferred stock and bonds. They raise money to buy Bitcoin and then use Bitcoin to get loans and buy more Bitcoin. Yeah. Yeah, I don't agree with that. So MicroStrategy is run by this dude, Saylor. And when I worked in the hedge fund industry, we used to call it MicroTragedy. I remember once I was on an earnings call, and he was on it as well, the CEO of MicroStrategy, ticker MSTR. And he didn't like one of the questions that were being asked. And so what he did was he abruptly said, this call's over. And he hung up. And I think what he's doing is fiscally irresponsible. If you invest in MicroStrategy, it's a software company. It's not a Bitcoin holding company. And I think it might work, but I don't care. It's just irresponsible. It's as irresponsible as El Salvador, a couple of years ago saying we're just going to use Bitcoin as our currency. And then back in November and December last year, the IMF wouldn't give them a loan unless they pulled back on that, which they did. Yeah. It's just bad risk management. Okay, Diego from Blue Summit Capital wrote, I currently run a boutique CRE, private equity shop and asset management firm. Real estate is typically more scrappy, but you've had experience with mid-market firms that bring institutional quality. Yeah. And when it comes to REITs, it's pretty easy investing in them, right? Because by law, 90% of their operating profits have to be paid out in terms of a dividend. But my goal, longer term, is for my students to make more money from their real estate investment holdings than they do from their base salary, like within 10 to 15 years. And I teach that in this real estate elective that you can get exposure to if you want. And again, set up a call with me if you want. I'm happy to walk you through this as well. Everybody needs to own real estate. And it's really interesting because I remember in the 2016 televised debate between Hillary Clinton and Donald Trump, Hillary said that Trump, what are you doing? It's unethical. You're not paying taxes. And Trump, who's transparent, he said, well, of course I'm not paying taxes because I own real estate and I get to depreciate. And so the richest people in the world, they own real estate. They get tons and tons of tax breaks through depreciation and writing off the interest on their mortgage for all their an unlimited amount if it's a real estate investment property or commercial investment property. And that's what I teach as well in that elective. Okay. Okay, Junhee wrote, hey, Chris, can you explain the cyclicality of semiconductor stocks? Yeah, absolutely. So semiconductor stocks, unlike other tech stocks, tend to be a little bit more cyclical, similar to, say, a Caterpillar or an industrial company. As a result, you don't want to value. Okay, so I know the number one semiconductor investor on the planet. He's a very good friend of mine. He's also from Canada, and he gave me a simple tip. And this will make you money. Don't look at PE on traditional semiconductor companies. Look at price to revenue. And you'll find that in every cycle, they bottom at a certain very low price to revenue multiple. That's how you invest in them. Don't look at earnings. Yeah. And you might look at EV to revenue as well if you want to. assuming they have debt. Okay. And then you wrote, did the market move on from green stocks? Seems like they barely appear in the limelight. What's your outlook on this industry? Yeah. So I think that, I think just given that the Trump administration is not as pro-green, it kind of doesn't matter as much to them right now. But in the long run, will it matter? Yes. I'm very long-term focused. So if these stocks get murdered, it might be a good opportunity to, to back up the truck or put them in your portfolio. What I don't like, though, is I don't like investing in stocks, green stocks, that are completely dependent on government subsidies. Because when push comes to shove and the global economy rolls over, which it always does, business is cyclical, then those subsidies get cut. I'll give you an example. Back in 2008, when we were within 24 hours of bank machines not working, what happened was there are certain countries like Spain that, there was concern that country could go bankrupt. And so they got rid of all their solar subsidies, which murdered all the solar stocks. Yeah. And that's why anything that is cap intensive, from a clean tech perspective, doesn't really get much funding because of the scars that venture capitalists experience. Myself too, I had it. I got exposure to it back in 2008. Yeah. Okay. All right, next question is, how did you get in hedge funds in your career like Kingdon and Citadel? You're a legends, hands down. No. How did you get interviewed? Also, what did they ask you? Curious. Yeah. So I remember I worked at Goldman Sachs. I wasn't too happy. People were great. It was my fault. I wanted to be on the buy side, right? And so for Kingdon, what I did, I networked like crazy, right? I called everybody I know that knew people at different funds and stuff. And the way I ended up getting an interview was, so on Bloomberg, I don't know if you guys use Bloomberg, but when you send a message to somebody, your name flashes in the top right-hand corner. So I sent that to one of the portfolio managers at Kingdon, and they were interviewing, and I went through the whole interview process. And I'm a very big fan of Mark Kingdon. He's a mensch. He's a good guy. He invests a lot in my fund as well. Nice guy. Okay. And then RJ wrote, worthy insights and views rendered. Bravo, great stuff. Keep up the great work. Thank you. Thank you for those emojis too. Okay. All right. And please keep typing your questions, everybody. Thank you. And then Pulasti wrote, hey, Chris, how are you? Have you seen the Landman TV series? I have not. No. But I'm always good. Thanks. I started watching a new show on Netflix last night, which is really, really good. What is it? My wife turned on. It was a cowboy Netflix. Really good, actually. Yeah, what's it called? Here it is. Ransom Canyon. I watched just the first episode. I absolutely loved it. It's got Lila Garrity in it from Friday Night Lights. I'm dating myself there. Yeah. But I absolutely loved it. Ransom Canyon. Yeah. And I just finished watching season 7 of Black Mirror, which is cerebrally brilliant. Okay. Next question is from... Okay, hold on one second. Diego wrote, just booked a call for Monday. I can't wait to meet you. Thank you. And if one of my staff takes the call, just say, Chris said he'd be on the call. They'll transfer it over to me. Yeah. I don't take many sales calls as I used to. Yeah. Okay. But I'm looking forward to chat with you, man. And thank you for mentioning that about that video. Okay, next question is from X, who wrote, from where you were in creating all your series on Udemy, have you been your key learnings now? Yeah. So I've made every mistake there is to make. And I think everybody needs to teach online. When one teaches, two learn. It's the best side hustle ever, right? It's better than being a teacher is better than being a doctor or, God forbid, a lawyer. Unless you're a civil rights lawyer, then I love you. And the reason I say that is if you're a doctor or a lawyer, you can only have one customer or patient at a time. But if you teach online, you can hypothetically have millions of customers at the exact same time. So everybody can teach. Everybody has something to teach. And, my kids, they still play Fortnite. They love it. My kids run around this Peter Griffin skin. It's the funniest thing. Anyway, but there's a guy named Ninja, right, who makes millions of dollars streaming Fortnite online on Twitch and stuff. He started out, a lot of people don't realize this, by teaching how to stream Twitch on Udemy. Search for his course. Everybody has something to teach. And I've made every mistake there is to make. So if you have questions about how to teach online, I can help you. Yeah. And I like it because it's like what you do is go to my courses on a platform like Udemy, which is one of the places I sell my stuff, and look at all the 1-star reviews for my courses, of which there's many, and make a better version of my course. It's educational Darwinism, and the student wins. Benefits. Okay, next up, Charlie Sheen Winning wrote, this is kind of not finance related. I just got my life insurance license, and I want to work with a good company. Any suggestions? Yeah. You can always go to glassdoor.com and do a search on insurance companies and find out which ones offer the best incentive program for you, meaning commissions. Because in that industry, it's a meritocracy. You eat what you kill. Yeah. And from a credibility perspective, just get the top 5 market cap companies, life insurance companies in the United States, and start your career there. That will help you if you're not happy to move on to another firm. Yeah. And the best way to get a job in life insurance or any company is go to LinkedIn, do an advanced search, find people that went to your school that work at one of the big 5. Yeah. Okay. And Lorette wrote, yes, please put the link. And I put it up 5 comments before yours. Thank you. All right. Mallory wrote, I see my Bitcoin Ethereum as sort of a pension. Ooh, careful. Yeah, make sure it's small. I don't want it to be too big. Okay. Is that the wrong way of looking at it? No exit plan. Let me give you part of your retirement savings program. But again, I humbly don't want my students to put more than 5% of their liquid net worth in cryptos. Yeah. Asabe wrote, how can we buy real estate in the United States when we live in Canada? Do you teach that as well? I do. So I own real estate here and in Canada. I own a bunch of houses in Southern Ontario. Yeah. So the way I teach everything, guys, is everything is very generic. So it applies in every country. So in this real estate elective, in this example, I entered one of the houses I own in London, Ontario, but it works in every single country. Yeah, you can buy real estate anywhere you want to. A lot of Canadians are snowbirds, meaning they spend half the year down in Florida and they own condos down there. Yeah, absolutely. Always talk to your accountant first before you do this. Yeah, especially in Canada. If you're buying real estate in Canada, you live in Canada, you want to get all the tax breaks you can. Yeah. And then Beck wrote TTWO, which is Take-Two, which is the owner of Rockstar Games, which makes GTA and an even better game called Red Dead Redemption. You wrote, it's going parabolic today because of the ramp up in the GTA 6 release. I can't wait, dude. Dude, when GTA 6 comes out, I'm not doing this webcast for a while, okay? Just saying. All right, so let's go there. Let's go to financeau.com. And I tell you about my success story humbly with Take-Two. I did really, really well with it. Okay, yeah, it's a good bump up. Everyone knows it's coming out later on this year, right? Huh. Yeah. So with Take-Two, I made a lot of money in this stock. I'll tell you, it was after 9/11. Okay, and when I returned to work at Goldman after they let us come back after a week of the market being closed, one of the first stocks I bought was Take-Two, and the reason I bought it was because Grand Theft Auto, I think 3 came out at the time. It was about to be released. Remember the one in New York, Liberty City? And in the background were the Twin Towers. So they had to pull it from the shelves, recode it, re-render without the Twin Towers in the background. And the stock got murdered because of it. So I backed up the truck. I bought a ton of shares. Yeah. That was an example of a broken stock and not a broken company. Yeah. And that was the mother of all catalysts is when GTA 6 comes out. Yeah. Okay, and then Jampio wrote, Peter Schiff says tariffs will worsen the recession by raising prices and causing foreign investors to dump U.S. assets, fueling inflation. Can you explain how this affects stocks, rates, inflation, et cetera? Yeah. So 2/3 of the United States, a lot of people don't realize this, but 2/3 of the United States economy is consumer spending, right? It's not big companies. Yeah, it's consumer spending. So if you think about it, if all imported products, right? So the Switch, Nintendo is smart. They already pre-shipped a ton of the Switch 2s into inventory in America a while ago, which is going to lead to a shortage in Japan. Another story. But let's just say that Nintendo didn't do that, right? Let's just say that Nintendo were to ship the Switch 2s to America in May ahead of the June release. And if tariffs were, say, I'm going to make this up, 100%. So instead of being $499, for the Switch 2 bundled with Mario Kart, it's $1,000. So that's just one example of things being more expensive. That's inflation. And that impacts all of us. Nobody wins in a trade war. But we don't know what's going to happen yet. Okay, Trump, he can often get a deal done. And he's already pulling back to China and sort of hinting that, hey, we're going to pull back on this stuff. We'll get a deal done. I think a year from now, things will look a lot better than we think. Yeah, don't believe the doom and gloom stuff, okay? And be careful when you watch the media as well, right? Think about it from their perspective. They want to sell you advertising. So they might say something like, find out with our interview with Peter Schiff why the world is about to end and your net worth is going to zero after this commercial break. Yeah. And don't listen to Ray Dalio either. Yeah. Okay. He's a smart guy, smarter than me, but I don't believe in all this doom and gloom stuff. Things are always better than expected. Yeah. But if we had massive inflation, of course the markets would get crushed. But there's no fear out there, man. Like the VIX is well under 40 right now. No fear out there. Okay. All right. And then Pulasti wrote, I started the Silver MBA program. Awesome. I won it by answering a question during the weekly live session. Excellent. Very cool. Yeah. I remember I used to do that. Yeah. And then next up, Manas wrote, thank you for everything, my mentor. See you in a few minutes on our weekly Zoom call for my students. Yeah, God bless you and your family forever. See you in the house of Habibi. Excellent. And dude, I didn't realize this, but Habibi is just for men. I didn't know that. Somebody told me Habibtis is for women. So I've been saying Habibi for years. Don't cancel me for that. Just kidding. Okay. All right. Ha wrote, hey, Chris, how can we network aggressively looking to start a career as an equity/derivatives trader? Yeah. So the easiest way to do it is to get a job at a big bank, right? Because they'll hire people that don't have too much experience, assuming you don't have that much experience, right? Because you wrote start a career. So what I would do is step one, and you could sign up for one of my programs. We help you with this. Step one, create an amazing LinkedIn profile. Step two, network with people that work at the big firms, Morgan Stanley, Goldman Sachs, etc., Barclays, whatever, depending on where you live in the world, and set up informational meetings. Yeah. And then if you sign up, I've got a finance program that I'm launching. It's a finance boot camp. I'm launching in early May, which is going to teach you everything about finance and help you get a finance job. And as part of that, actually, I don't know when I find time to sleep, but I do. As part of that, it's good. There's a massive exercise book called Ace Your Finance Interview, where it's like 150 pages long. It's just a massive course. And so I got up really early this morning to record. And what's included in it also is this here. I teach you how to create financial models and everything, and what documents to bring directly to your interviews, and how to answer every kind of finance question you could possibly think of. Okay, I'm going to wrap up this call in a minute here. Okay. All right. You're most welcome, Pelosi. Pelosi wrote, any tips for facing an interview with confidence? Yeah. So what I want you to do, so if you practice, right, like answering all the questions, and you're already in my Silver MBA program. So for a general interview, what you can do is go to PG1. That's Personal Growth Semester 1. And I teach you everything in there. Okay, confidence, everything. And if you want, I can mock interview you in half an hour. Just go to the first lecture of your MBA curriculum to join the weekly Zoom call, and I can help you there as well. Okay. And then Junhee wrote, hey, Chris, you talk about not day trading, that's right, and focusing on long-term investments. Did you have this mindset at the start of your career? Is it something you learned through experience? Care to share an anecdote? Yeah, absolutely. Look, we've all made the cardinal sin of selling something we like because it went down. And then you look back and you're like, oh my God, the stock chart looked like this historically. And I sold it because it went like this. And now it's like this. Yeah, I just learned to become a long-term investor. And I learned also by managing money professionally that what happens is the bulk of your upside in your portfolio in a given year, or alpha, if you generate more money or a better return than your benchmark, like the S&P 500, the bulk of your upside usually comes from a handful, 2 or 3 stocks that you did a ton of research on, and you're a pit bull and a pork chop, and you're not going to sell. And all that other trading crap didn't really amount to much at all. You go for the big wins, the 5x5s, stocks that have a 500% return within 5 years. And yeah, I'm mostly wrong. Maybe they'll only go up 300%. I don't know. Sometimes they go up more. But do the research. Build out your financial model. Think long term. The longer the view, the wiser the intention. Yeah. Yeah. And the worst thing we can do is actually stare at the screen all day. Stocks going up. What a waste of time. It's like instead of spending 4 hours watching a long baseball game, you just read the box score the next day. Yeah. Yeah. In fact, at a lot of hedge funds, analysts are not allowed to have Bloomberg terminals. Good reason. Like Maverick, which is a tiger cub in New York, was like that for years. Okay. Oh, Willem, how are you? Willem wrote, nice to see you're here every Thursday. Thank you. Good. Willem was actually on my first webcast, the first couple I had years ago. And I always call him McLovin because I remember one of my first webcasts, I brought that ID from the movie Superbad, McLovin. Yeah. I remember showing that. And no, I had asked a question because hardly anybody was on the webcast, right? I said, anybody guess what the movie this is from? And you were the first one to get it. Yeah, it's good to see you, and thank you for joining me all these years later. Thank you. Okay. Next up, JMP wrote, in the next couple of years, do you think the Chinese yuan will be more valuable? I'm trying to understand the dynamics of it. Well, it's all controlled. You're most welcome. It's all controlled by the Chinese government. They manipulate their currency. That's right. Yeah. So it all depends, right? So if the Chinese government wants to boost exports to the United States or overseas, what they'll do is they'll make the value of the Chinese yuan lower. Okay. And by doing that, it makes the value of their products lower when it's converted into other currency, right? So they manipulate their currency a lot. And that's something that Trump's not happy with. Yeah. Just to put it out there. Okay. And then Asabi wrote, what is the best way to do research on a 5x5 stock? Meaning a stock's got a 500% return within 5 years. So first of all, don't look at a large cap stock because they won't go up 500% for the most part. Maybe you want to look at mid cap stocks, right? Or companies in the Russell 2000, small cap stuff. Then what you're going to do is you're going to complete an entire report, okay, on the company. You're going to analyze everything. Most important thing is your revenue forecast, income statement forecast, etc. So you can come up with 3 different valuation methodologies for a target price. And this is available to my students in my MBA degree program. For those of you already in my MBA degree program, which we launched last decade, it's been fun. Just go to EMS 4-2 for this template. That's Economics Management and Strategy, Semester 4, Class 2. Yeah. Okay. And then I always wrote, as an MBA Gold student, do I need to upgrade to the MBA Executive or Accelerator to join the 3-hour Zoom call? No, you can join that one for free. If you want to get access to the daily calls with me, it's definitely it's an upgrade you need. Yeah. And if you need the Zoom address, always, please email right now, support@harounventures.com. And I'm going to turn my watch around. Whenever I have to remember something, I look at my watch. I'm like, why the hell is my watch turned around? Oh, yeah, I got to remember that for hours. Yeah. So again, email support right now, support@harounventures.com, and I'll send you the link. No, you never pay again, ever. You get access to that 3 hours for life. Yeah. The problem is if you have to remember 2 things, then you're screwed. Yeah. Okay. Topher wrote, haha, I remember that McLovin webcast. Oh, dude, that was so long ago. Yeah, let me go really quickly. Give me a second, guys. All right, I'm going to go here to my website, go About Weekly Webcast. And then I'm going to go, see if I can find it even. I can't believe I've been doing this for this long. I love it. It's so fun. Okay, let's go here. Oh, it's going to take forever. I'll do it real quick. Okay, hold on a second. I remember I had hardly anybody on in the early days. That's me at a Tony Robbins event. That's right. I broadcasted there. I remember that. Yeah. I would always have to come up with a script of stuff to talk about. Let's see here. 7? I guess it only goes back to 24. But it was one of the earlier ones here. Shorter hair. Oh my God, that's right. Here's just my son, Dylan. This is my studio the way it used to work. Okay. All right. All right. Let me get back to your questions here. All right, good. Okay. Junie wrote, one last question, sure. You attributed the downfall of Ethereum due to it being a risky asset. So all ships sink, all ships rise together. There is a, generally speaking, a high correlation amongst cryptocurrencies, right? And as the whole de-risking trade was occurring over the past 6 weeks or so, just given because the fear, uncertainty, and FUD from the tariff wars, all risky asset class got hit. And it got reallocated into less risky investments like gold, for example. Okay. Then you wrote, in a risk-off environment, how is Bitcoin retained and even increases value? Appreciate your... Yeah, of course, yeah. Yeah, so when people are re-risking, meaning buying risky assets, it's usually when interest rates are low. So during COVID, when interest rates were basically zero, the government was basically telling you, don't keep your money in the bank. You're not going to make any money. Invest in everything except for US dollars. And what's happened, actually, it's interesting. Cash is always trash. So the US government printed about 50% more of this stuff today versus during COVID, right? And what happened was interest rates, when you increase supply of money, the price goes down, right? Meaning interest rates. And so what happened was, if rates are zero, basically, then you're not going to keep your money in the bank. You're going to buy risky assets. Conversely, when rates are high, like back in the early 1980s in the Carter administration, before my hero Ronald Reagan became president, interest rates were closer to 20%. And they had to do it. Paul Volcker, the Fed Chairman, God bless him back then, had to make rates that high because we had rampant inflation. As a result, there was no IPOs until 86, until Microsoft and Oracle went public within 1 week of each other. And nobody invested in venture capital because everybody just kept their money in the bank. If you're going to make like 15, 20% owning US treasuries or keeping your money in the bank, of course you're not going to buy stocks. So re-risking, meaning riskier assets like NFTs, which people don't talk about anymore unless you're Trump, and Bitcoin, cryptocurrencies, those go up when rates are basically zero. Yeah. Okay. Next up, Waji wrote, hey, yes, Habibi is Middle Eastern for Arabs males, but in North America, it's not used at all except Egypt for young boys. Interesting. Yeah, my dad is Egyptian. And the only word I can say in Arabic is khamsa, because I asked my dad, how old am I, when I was 5. Okay. And then Michael Hughes wrote, hey, Chris, I just found your financial analyst and crypto course today, and I see your other courses. Can you please help me with direction? Because all this is new to me. Yeah, just ask questions within the courses wherever you bought them, and I have customer service people. I'll answer any questions you have. Okay, guys. All right, God bless you guys. Thank you so much for being part of this webcast. If you're in my MBA programs, I will see you shortly in 18 minutes for our Zoom call, where you can ask me questions. I can help you with your resume, LinkedIn profile, whatever you want. It's more interactive, it's more fun. To learn more about the MBA degree programs, meaning the 3 programs we have available, which are MBA Accelerator, MBA Executive, and Diamond. What you can do is you can go to, they grow up fast, man. All right. You can go to my website, harounmba.com, then go to MBA Degrees, and read more about them here. We have one-on-one coaching, 10 hours of one-on-one coaching with me, and then daily group Zoom calls, 300 hours per year. Just click here to learn more and set up a call with somebody in my staff, and we can walk you through it. Okay, guys, God bless you. Thank you so much for being on this weekly call. And I'm going to end this call like I always do with a very short video that's going to change your life. It's an interview that I licensed with Steve Jobs from the Silicon Valley Historical Association. Thank you. God bless. See you soon.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.